but we are not there. We are here. This is where we are at. This is where we are at. So we have a 3-day it's a 3 daily candle pattern or something like that. So, but the idea behind that is if you are bullish like this here, or if you have been bearish, even if you've not been bearish, but I just wanna I just wanna highlight it when we have like a bullish order flow like this here. So you see you've been bullish the whole week, last week, right? And I think we had done something there. Okay, let's go to weekly. What am I doing? We don't have enough time, man. Let me just dive deep. Let me just dive. Let's focus here. Man. Let's focus on this. I want to show you something here, just here. What you do is if you have a bullish, let's just take 1, 2, 3. These 3 candles here. Okay, not this one. This 3 here, not this one. So we have a bullish daily candle, which was on Monday last week. This one as well. No, this is Monday this week because it's Saturday today. Monday, Tuesday, Wednesday, Thursday, and Friday. So on Monday we were bullish. Tuesday we made a high. We are more likely to make the high of the week on Tuesday or Wednesday. Okay. And then Tuesday we made this high. I thought we made a high of the day, but no, that was not it. So we came back on Wednesday, we took the Tuesday's high out. Right here, you want to see how that daily candle finishes. It finished as a bearish candle. And once you see this, after taking out this high, you want to go to a smaller time frame, like 4 hour, to check for structure there. Sorry about that. 4H. That's the right. So we took out we took out Tuesday's high right there, and we had made relative equal highs. Took it out and then we traded low. We created a bearish market structure shift somewhere here. It's more visible on 1 hour, I'm sure. And then here is 1 hour. So on 1 hour we have this. Let me just open my session breaks here so that you guys can see. I'm just doing a summarized version of the top-down analysis. We took out Tuesday's high. This is Tuesday's price between these vertical lines. So this is Tuesday's high. This is buy-side liquidity. And then we did this during the New York PM session. And then we created this fair value gap here. This is a bearish market structure shift because we took the low of the high. We took out the low. Yeah, we took out this low. This is the low of the high that took out buy side. This is all buy side. So once we traded below this low here, we created this fair value gap. This is a pure 2022 model. So from there, you would have went short, and where is sell side? You have these relative equal lows here. You would have taken a short right there and held it throughout the week. Not the week, man. This was Wednesday, Thursday, and Friday. You would have hit profit the following day there, right there, right? But also on 4 hour, I think, or on daily, we have a fair value gap down there, right? We have relative equal lows and this fair value gap here. You may have also taken profit at the CE, which is the center of this fair value gap here. This is a daily CE. This consequent encouragement. But the whole idea behind this trade is that we made the high of the day or high of the week on Tuesday or Wednesday. And we've been bullish the whole entire week. And if you look at this price, you need to retrace and fill the imbalances here because we created liquidity and there's a gap here. We also have this order block, which I think we might still go down, and it's our next draw on liquidity for next week, but we'll see how we open up, how price opens up next week. I think we are coming for this order block because we also have this imbalance here before heading higher to that volume imbalance on weekly, which is our draw on liquidity. But obviously, I will see how we trade on Monday and Tuesday, and probably Wednesday. Then I'll start looking for swing trades there onwards. But I want to focus on like a smaller time frame since we trade the silver bullet, right? So on this day, I don't want to focus on this day here, but this also was during New York PM session. As you can see, this trade, the entry was at 1520, right? That's a New York PM session, which starts at 1:30 to 4, but the silver bullet is from 2 to 3. So this is a macro. This is a macro. Is it 3 to 4 or 2 to 3? Let me check. Still not so familiar with New York PM silver bullet times, so I always have to refer to my journal here. Okay, where is it? Where is it? Yes, it's 2 to, it's 3 to 4, 3 to 4, 3 to 4 is London. Yeah, 2 to 3. Yes. So this was like blanche macro. But we'll talk about that. Macro starts at 15:15 and then 15:45. So okay, yeah, it was a New York PM session trade. And look at this fair value gap right there on 5 minutes. We go to a smaller time frame to take a trade because we want to minimize losses. This was the actual fair value gap that you refuse to enter this trade right here on 5 minutes, not the one. There we go, bam. And you hold that until you reach for these lows here on 4 hours, at 4 hour, 1 hour. But I want to focus on 1 hour time frame for Friday. So we took out since we are targeting the fair value gap down there, right? The fair value gap down there, because we haven't filled the, let me go to daily, man. Let me go to daily. Since our drawn liquidity is this whole entire fair value gap, on Friday, you can't expect to just go back. Friday is a retracement. Thursday and Friday is a retracement. We don't have the power. The algorithm doesn't have the power to start a new trend on Friday. It's gonna continue with Friday, Thursday's trading most of the time. Most of the time it does that. So coming to Friday, I want us to go deeper on the silver bullet lesson here. So this is Friday, right? Institutional order flow was bearish here, and we have these order blocks. The down close candles must hold price. So we have this order block. Once we have this order block, I expect this to be a breakaway gap because this must hold price. Should we retrace before the higher time frame objective is achieved? I mean, yes. So this is going to be a breakaway gap instantly if and I expect price not to go above this order block once we retrace if the higher time frame objective is not achieved, which has to fill that daily fair value gap completely, which was a buy side imbalance, sell side inefficiency. So it was offered only to buy side, but not so efficiently field going. That's why we are trading back inside it. This value gap here. So let's go back to 1 hour. So on Friday, coming to Friday, yes, that you are still bearish, man. It's a continuation of Thursday, right? And then price opened and then it rallied up. It created these relative equal lows here. This is sell side liquidity. So you can just deem this your relative equal lows, and then this is drawn liquidity for this day. It's a short-term draw, and once we go up like this, if you've been making money the whole entire London, you expect price to retrace during New York, because we haven't done any much retracement. We haven't retraced, and we have this order block, which was and 1 hour order block, and this favorite gap right here. So price always seek liquidity, and then after doing that, it feels an imbalance. So you have this imbalance that's in the form of sell side imbalance, buy side inefficiency. That's why we are buying to feel it, to efficiently fill this imbalance, right? So we took out these relative equal highs right there, and then we traded inside that imbalance. But we want to check if we got an entry for silver bullet. I'm running out of time because I'm trying to be fast, and if you've been doing your studies, I'm sure you are with me. You are still going with me. I'm not speaking Chinese to you. You are just happy that I'm highlighting this. And so you highlight your your Asian session. You start at 8 to midnight. This is your Asian session. You want to highlight your sessions now. Your sessions liquidity. You have Asian high that was taken out. Yeah, but also you want to extend this midnight open throughout the whole entire day. You want to check for entries during the silver bullets time window, which is New York AM from 10. This is what I do every day. I highlight my Asian session. I extend my midnight open. I also check on 1 hour and 4 hour liquidity like this to see if we are trading up, if we are going to take out any buy side, and then feel maybe an imbalance there, which is what we did. Exactly what we did here. And then I want to highlight my 8:30, because I want to see where those Judas swings are gonna take me. He has been seeing the same thing the whole entire week. Hey people. And then you have this okay, so I'll just put my vertical lines like this: 8:30, 9:30, New York time. I'm using New York time, not South African time. That's very important, guys. And then this is 10 and then 11. This is, I deem this as silver bullet time window. So I'm just gonna say here, silver bullet hour. Okay. Silver bullet hour. Silver bullet hour. Center. Okay, there you go. So I want to see if there was an entry to take this thing up or down, okay, during this time window. Okay, and we have this PM session, okay, from 1:30 actually. And then you have this, I can already see it, ish. And then let's 3 to 4. And then this is silver bullet, 2 to 3, 2. Oh, what's happening now? What's happening now? There you go. You have 2, 2, 3. This is silver bullet. I can already see it. Yeah. I don't know if you can. I don't know about you. Silver bullet hour. This is a New York PM session. New York PM silver bullet hour. This is New York AM silver bullet hour. So you do this thing here. What you want to see, you want to highlight also your previous session, which is 2 to 5. That was London. You want to highlight your highs and lows there, 2 to 5. So this is what you do, né? After doing all this easy work. During this is London open. Kill zone. You want to highlight your high and your low there. London open. Okay. I'm trying to. This is London open. So what you want to do here, you want to highlight during this is your Asian session, right? 8 to 10. You highlight your extend your look at this. You extend your Asian session, which is your sell side. This is your Asian session, sell side liquidity. And then your London high was already taken out, right? But you continue to rally up. And then here you already know we have no business going above this here. And what time is this? This is 9:30. You would have went a short right there, but you wait. Okay, you say no. I want to see what it does after reaching this, because this is your point of interest, right? On a bigger time frame. Okay, fine. So what you do is after you see it hitting here, you go to 1 minute. You want to see you're already bearish. Your bias is bearish already. This is let me just make this red so that you can see it as danger. You understand? So price rallied up, and we have this sell side. We've been creating sell side all this time, and also haven't taken out Asian low. We also have to feel this daily imbalance, which was a fair value gap. And then 8:30, you want to see your Judas swing. Are there any news? No news event, or there were no news event here, so nothing really happened. We just continued, and we made a high at 8:30. We took it out, and then but we didn't take out the low. We generated more sell side here, more sell side during this time window. Okay, fine. We've been generating sell side. Okay, and then we at 8:30 we rallied up, created a high, and then before we opened, then this is New York is equities market open. We took that high out, so we took buy side here on a smaller time frame now. This is buy side liquidity. We took these relative equal highs. Let me put this on top. And then let's go to 1 minute. Once you check if there was a model on 1 minute. By model, I mean a silver bullet model. The fair value gap that happens, that appears during this time window. This is New York AM silver bullet, but you can find it as early as 9:30. There is a 9:30 fair value gap also that is strong. It could be a fair value gap or an inversion fair value gap. It could either be one of the two. Okay. And then let's see here. I'm trying to see something here. BTC. There we go. Okay, sorry about that. And then there's a half past 9 fair value gap. You can also use that as entry. If it's in line with your bias, which was bearish in this example or in this lesson. But buy side, we took buy side and then we rallied lower. We took sell side. I mean, this is a bearish market structure shift here. This is a bearish market structure shift because we broke that low and we've been impulsive. Price has been very volatile, approaching that. And then we rallied up higher. We had a BPR. This is a balanced price range. We have a fair value gap that's facing another fair value gap. This is a strong rejection. So this is a balanced price range because price traded up, traded back down, and then came back. It filled it completely. You take a short there, you put a stop loss up there. This is your early silver bullet. I call this an early silver bullet because it took place before the silver bullet time window, but you'd see me sometimes annotating this as 930 fair value gap. You'd see me say this is a 930 fair value gap. This is a beautiful entry, beautiful entry. Because look at the stop. The stop was just going to be tight here, and you target the low-hanging fruit. You could either target this low, that low, or these relative equal lows here below midnight open.